Hello to all traders and welcome to another edition of Stock Watch. This video has been once again brought to you by Orbex. We're looking at Netflix stock in the near term today as they reportedly laying off another 300 members of staff, and this continues the bad year that they've been having with the negative subscriber growth. So this joins their 150 employees that have lost their jobs earlier in the year, and most of the layoffs are coming in the US. A spokesperson has said that even though they are looking to invest and rebuild in the company, the growth does not fall in line with their profit margin at the moment. So unfortunately, more workers are getting laid off in the near term at least. So if we look back at April, when the first earnings season was released for the first quarter, we saw negative subscriber growth for the first time in 10 years for Netflix. But this was always going to be in the plan, let's say, because there just aren't enough people in the world to keep on growing and growing this Netflix subscriber base, especially as they allow a password share as well, so more than one person can actually log on to someone else's Netflix, which is something they're considering now to ban, so they can obviously get more subscriber growth. So I don't know how that will go down with a lot of subscribers currently. So we'll see what happens in the near term, but this 300 job layoff is roughly about 3% of the Netflix workforce, which includes over 11,000 employees currently. So we'll see what happens there. But if we're looking on the charts, since this recent peak that we saw at the back end of 2021, you can see this degradation, that on the stock, and we saw these big gaps here, and a lot of investors were thinking that this would be possibly not a runaway gap, just a little bit exhaustive, and then we'll start moving up to the upside here and here. But unfortunately, there have been pretty much runaway gaps, in the sense that when a gap does form in the market, if it keeps on going in the same direction, then it's very difficult for it to reverse or even retrace anything. So we're going to see what is coming in the near term. But as you can see here, if we're looking on technicals at the moment, with the assistance of the Ichimoku cloud, we're in a very vast bear market, and these streaming giants, not just Netflix but other ones as well, we'll look on Disney Plus shortly, we're seeing now possibly this to start falling lower and lower. You could say on the RSI there is a slight bullish divergence here, but it just isn't enough to keep prices to the upside at the moment. So it'll be interesting to see what we can get from this downswing, let's say, and if there's going to be any more gaps to make any opportunities as well. So like I said before, even if it is a sell position you're putting into the market, it was still good opportunities. And as you can see here, another gap to the downside in recent sessions, and now we are looking to see if that's going to be a runaway gap as well. We are slightly moving to the upside, but currently it's not looking too good for Netflix, especially when the year of discontent keeps on coming. 2022 has been probably one of the worst years of Netflix's streaming service. So we're going to see in the near term what that's going to bring, and we're going to see what the opportunities are in the near term as well. So speaking of streaming giants, we've got Amazon Prime, Disney Plus, we've got BBC. Let's take a look on Disney Plus, because currently we are still seeing at the moment Disney's stock plummet quite significantly as well. As you can see here, a little bit like a few other stocks, when we got to the peak here at the back end of 2021, we are now seeing this downturn in prices, and we'll just have to see if, well, let's just put a channel in here from the last peak recently, what's going to happen. As you can see, in a very, very vast bear market, which is not good news for the company. Good news for bears, not good news for the company of Disney and obviously Netflix as well. So we're just seeing what the near term holds. If we're looking at technicals again, not much to sink our teeth into on the RSI. Looking to and a very bear market on the Ichimoku cloud as well, trading very fastly away from it. If we look on the 4-hour chart, we are now seeing a possible move to the downside. We're just waiting on more information coming out, but at the moment it is looking like we could see a bit of support on this bottom channel because we've got a slight bullish divergence here on the RSI, very clear there. So this could be a possible move to the upside if we get a bounce. But again, very, very negative comments coming out of a lot of these streaming services, because as I said before in previous stock watches over the years, there just aren't enough people to keep on having this subscriber growth quarter after quarter, year after year. So expect these declines in these streaming giants. That's all from today's stock watch video. Thank you very much for joining me, and we'll speak again on Monday to see what the main news is coming out of the weekend and the opportunities as well. So have a great weekend ahead, and bye for now.